And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon. Welcome to the Market Recap, Tuesday, June the 28th. I'm John Hoagland. Thanks for trusting me with your time. Well, we talked over the last couple of days about how the rally in the equities was feeling a little bit hollow. And I think we had a nice proving of that for us today with a little bit of help from lower consumer confidence. We talked about that confidence number at 9 o'clock this morning as being one to keep an eye on. And it certainly seemed to change direction in the equities and create an opportunity for the downside to really take over. The bear claws and jaws beat the bull today. Absolutely. We have the S&Ps closing down about 2%, NASDAQ down about 3%, and the Dow futures down approximately 1.5%. Crude oil prices resolved higher today on stable volume as the OPEC chats continue and news begins to come out about what they've been talking about. The E-mini S&Ps, that struggling rally, gives way to confidence issues, takes price back to the Friday low, last Friday's low, and now even into the gap that we've been watching to see if we can get that gap filled. NASDAQ takes an even deeper drop and actually fills that gap today. Gold just drags along the bottom with no reaction to equities or anything else, really. Gold has just been kind of a dead stick lately. Looking forward to seeing that market come back into prevalence because I think we're going to see some pretty good opportunities in it moving forward, just not today. The euro, by and large, just like gold, dragging along the bottom, sort of. The 10-year stays in its channel, or as we say on the Market Recap, in its dannel. And the natural gas, kind of indecision today, but a higher overall value for the session. And we're going to, of course, see that on the charts here as we move along through the recap. As far as news today, a lot of it was about the Fed speaking. We had Williams saying it's reasonable to get to 3.5 to 4% in rates. 75% basis point move in the last meeting was the correct move, and it's up for debate on whether the July meeting will provide a 50 or a 75 basis point increase in rates. The Fed's daily expects the U.S. to have slower growth, of course, but not negative, and unemployment to rise a little bit, but not like in a recession. That drop in consumer confidence today really sent stock markets that were struggling to the upside. We've been watching that for a couple of days. Those rallies have truly been hollow, so we really could have expected a pullback today, and I think that was certainly exacerbated by the consumer confidence number, which was, I got it written down here somewhere. 98.7. They were expecting 100.4, and there was even a revision lower of the last release of consumer confidence. So a little difficulty. I would think that would be correct as we start to see the economy faltering. We see inflation, we see gasoline, we see all of these uncertainties out there. It's difficult to remain extremely confident in this environment, and we get that, which certainly showed in the markets today. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, love are always welcome on the recap. This is the third to the last week recap for the week. Second to the last. Tomorrow will be the last recap, of course. I'm going to be taking next week off. We won't have any Group coachings, we won't have any Make Hogue Money next week. I know I'm going to miss you guys. Hopefully you're going to miss me a little bit too. And looking forward to getting a little time away from the markets. After today, I can certainly use it. It seems down days to me always, even if I do well, even if I participate perfectly, have a much bigger toll on my mental capital. The heck is mental capital? It's that energy that keeps us engaged in the right way in the marketplace. And down days always seem to have a bigger draw on mental capital. So I'm going to make sure I get a really good night's sleep. I'm going to take a walk and I get a haircut maybe, and really try and be prepared for whatever happens tomorrow. GDP is, of course, tomorrow at 7:30. That could be a big number. It could be a nothing number. Sometimes these things are just a big nothing burger, and we just have to trade what we see. Of course, it's yeah. Well, I mean, tomorrow is the probably the biggest day this week. Hopefully, we're going to have EIA numbers come out tomorrow. We haven't seen those numbers in 2 weeks. From what I see here, they're still on the schedule. We have GDP tomorrow. We have a couple of talking Feds, including Chairman Powell at 8 a.m. Central, just before the S&Ps open up. 7:30 is the GDP number, and then the EIA Petroleum Status Report tomorrow at 9:30 as scheduled. Don't know if it's going to happen. I haven't heard anything new. They never did release last week's. Hopefully they'll have their stuff taken care of and straightened out. As somebody who does have a tendency to get messed up by technology, I get it. Maybe there's some things going on over there that they got to figure out. Maybe they got my gremlin. But I'm looking forward to seeing what that information comes out. We do have the API today at 3:30. We'll, of course, be looking at that as well as if we are crude oil traders. Make Hogue Money today. Thank you all for attending. Thanks to Anne Marie and to Matt Hoyt for speaking up and speaking. If you did not get the opportunity to do that, just raise your hand. We're going to get you in there. We didn't make any money today. We didn't lose any money today. We were short right near the high in the S&Ps, up against the overnight high, or actually Sunday's overnight high, the high for the week. And then consumer confidence came out, and then things really started to head to the downside. We looked to take a short at the bottom of the opening range, which was initially the low of the regular trading hour session, and we didn't get it. We finished the session, and right after that is right about when the market really started to accelerate to the downside. My hope is that you didn't try and fight it all the way down. That's one thing that the traders tend to do. Because the market's already moved to the downside, we don't feel like we want to sell it at a lower price. So we kind of line up levels where we're going to see if we can't find some support. And while we can do that, you may be successful at it. You can't fall in love on days like today. But I think it's one of the things that takes traders a while to learn and to figure out is you don't want to fight a directional day. You're going to see on the chart here we have negative almost 24,000 in delta. That means that most of the time frames that are trading the S&Ps today were looking to try and find ways to get short. They were hitting bids. They were looking for ways to get short. They got short. We do have a little bit of gap and naked point of control down below to kind of clear up. I don't know what's going to happen tomorrow with GDP or anything, but we certainly are going to have some opportunities ahead of us. Let's jump in to the charts. I've got my notes from this morning, and let's see what we can figure out. So here's I'm going to start with the E-mini S&P. It seems to be, at least for me, the most fascinating market that we've been dealing with this week. So last week we had the up move. Did it impress? It did not. Friday we had a big blow off to the upside. Did it impress? It did not. Volume wasn't that great in futures. It was pretty good in the New York Stock Exchange, but we didn't add open interest. When we don't add open interest and when the market is moving in one direction, it's indicative of a weak auction and an auction that is likely to change and maybe change sometime soon. Yesterday, we had an overlapping to higher range and value. We did have, I believe, let me double check here. I'm going to get to the final. So we lost almost 18,000 in open interest on an attempted move to continue this move to the upside yesterday. Volume was relatively stable, a little bit lower, but much lower in New York. So this market, as we talked about this morning, it's not doing well, continuing to push in the upside direction. Well, we tried to go higher this morning until that consumer confidence number came out. That, I think, was the final stab that exacerbated the fact that the market was not doing very good on the upside auction. That upside auction ended today and found some pretty stiff sellers. Here's the gap that we're talking about that we need to fill from Thursday to Friday. And we've got a naked point of control down here. There's a few things that we could stand to come back down and recheck down here. I don't know if we're going to do that. Who knows what's going to happen with the GDP number tomorrow. But we really did not do much for window dressing of the end of the quarter, end of half the year today. If we were trying to window dress this thing higher, we didn't do a very good job of it. So we've got a pretty good push to the downside. We didn't even get a dead cat bounce at the end of the session today. It just kept pushing lower. Here's our delta number at the end of the day here, around minus 21,000. That's 21,000 more contracts that traded on the bid than on the offer. We use delta sometimes to sense when we see longer time frame traders kind of opposite the short time frame. We didn't get to see that today. We did not have a delta divergence, I don't think, at any point today. What we saw today was many time frames acting in concert against price, and that price moved lower. Here's crude oil. I haven't been very active in crude oil lately, and for whatever reason, I think it's been a more difficult market to kind of cover and to trade. Number one, it's the monthly rollover that I think sometimes gets me, because I depend so much on volume and open interest information in the other markets that I just I just have a hard time trusting it in crude oil. So we did end up closing above weekly kickoff high. There's a positive. Volume has been stable. I wouldn't say it's been too impressive. But again, we didn't even get an EIA number last week. We know OPEC Plus is chatting this week. I think they're going to finish their meeting on Thursday. Maybe we'll get some more solid information on that. Here's the 30-minute chart. So we opened above range and value. We closed the gap and traded to basically weekly kickoff low in the regular trading hour session within 12 ticks of it. And remember, all these important levels are usually zones, not finite levels, and the market did trade almost right back to the settlement price, which was 109.57, within 5 ticks of that. When we have overnight inventory like this, the target is settlement. We got pretty close to that. Best trade location of the day. Market turned higher, and we've really started to kind of put some decent touch points on this trend line here. I'm going to find this up a little bit. So we've got contact here, close contact, a little contact here, just kind of capping off this whole move to the upside. We don't know if it's going to end up being a bear flag or a bear pennant or whatever until we get the opportunity to see price back down to this level, if we do, or when we do. If this formation continues to hold tomorrow, What's the API going to say today? What is going to go on with the EIA? What's going to go on with OPEC? Stay tuned to as the market turns. Gold, just a dead stick. Nothing. Very, very narrow range today. Very low volume. We know that we lost, at least I think we did. Let me get to the final here. We had added 1,000 in open interest. I think this morning we were looking at the open interest. Yeah, about 1,100. That's about right. So we did add some open interest yesterday. Did we do anything? Did anything change? No, we didn't. It's an inert number, especially in this situation. We traded maybe down to last week's low today, relatively close. So we're getting kind of cheap in our area of balance, but still no real good opportunity. Look at this. How many times this market pushed down to the low here, pushed down to the low here, pushed down to the low, leaving a weak low that was tested after the regular trading hour open. This may come into contention tomorrow at some point, but the market really just kind of dragging along the bottom, not really finding any momentum in either direction, just kind of lollygagging along, smelling the flowers along the way. It's hanging around, feeding the fish, just doing whatever it does. Whoop, there goes my loafer. Euro, kind of the same, just kind of dragging. Still range bound, still short time frame control. Nothing tremendous to see here. As far as the open interest yesterday, we added about 4,000, so there may be some blood coming into this market. But right now, it's not giving any up. I feel like a vampire trying to get something out of this market, and I have not been able to. Here's the 30-minute chart. Market opens, touches the gap, rolls lower, ends up dragging along the bottom, just the way gold did today. Gold just kind of opened, moved, and sat. Open, move, sit. That's the MO for these markets, and it's really. Sometimes it seems more easily seen, but lately maybe it's me. Maybe I just need some time off to get a little time away from the markets. Sometimes these markets just seem very difficult to read, not as if they aren't anyways. So here's the 10-year, here's the daily. Bull flag, pop. Bull flag? I don't know yet. Volume very low, but stable. 30-minute. Narrow ranges, low volume. This is lining up very much like a bull flag. But why? We know rates are going up. Doesn't mean that the market can't take care of all of these shorts that are accumulating here and run it up on them. Don't, if I'm going to trade what I see, I'm going to be looking to buy lows here. I'm going to be looking to sells against this trend line. We break out above this trend line. We go with it. We go with breakouts outside of balance or flags. Natural gas. We didn't really have much of a day yesterday. We did add 14,000 in open interest. Another attempt to move higher on higher volume. This is important, ladies and gentlemen. We did not have any delta divergence, but if we started to accumulate more open interest on this push to the upside on higher volume, that could mean that this bottom here is creating a new upside auction, and as long as the volume and open interest continue to increase, the upside auction is going to appear healthy, and I don't want it to look for shorts. I want to look for longs. Tomorrow morning when we do the market forecast, we'll talk about what happened in at gas today, and we'll take a look at that open interest. I don't have a sense for what happened with this open interest today. Get some pretty good points of contact along this trend line. What to do? What to do? I did say good afternoon to everybody, so I want to go ahead and do that. Scott saw and he conquered. He's the first one in the room. Hope you had a good day. Chopped up early, but caught a nice one to ride out in the afternoon. Good to hear. Scott saw Tachyon's James. Good afternoon. Tachyon down 190. Ready to trade another day. Outstanding. Spencer, good day today. Back above step 2 profit. Pretty sure the 40% rule is going to get me again. Well, just stay calm. Trade your strategy. Don't try and make it all in one day. Just let the market feed you. Let the market feed you. Channing, today was tough, up 2.3. After the first hour, tried to grow that, ended up giving a touchback, but still over 4 digits. I'll take it. Nice job, Channing. When you get up that much, you got to really set some kind of a percentage of how much you're going to risk and give back to the markets if that is the case. I completely concur. You're up 2,300, or you're up, 2,300. You're seeing things well. It's a good day. Keep trading until you give a certain percentage of it back, then walk away. I'm proud of you that you did that. Tom Hoagland, hello and good Tuesday afternoon, all. Moody's cranking here. I'm not sure what that is, Tom, but I love you. Laney caught the break above the OR, and then the break below. 4 tries, not including practice accounts. Past step 1 for the first time in 150K, done before lunch. Mixed emotions over here. I'm happy for you, Laney. Nice job. Nice work. You've finished your past step 1. Get through step 2. We're always looking forward to your success. Glitter Sandwich, good to see you, Bill. George, good afternoon, traders and Lacey. Where is Lacey? She's been hanging around all day. Now she's not here. George, Channing. Yeah, nice job. Joe, controlled risk, but still hit my personal daily loss limit. Ouch. Got to stop short of that. Got to stop short. Maybe it's the number of consecutive losing trades you want to be looking at. Federico, Dr. VJ. James, Vince, good afternoon, my good friend. Hope you're feeling good. You really nailed the day. Whether or not we caught it or not, we'll get the next one. Dan Trader, good afternoon. Still working on trading trend days. Looks easy, but they don't match well with my style. Always learning and improving. Yeah, the thing about trend days is once you get in, all you have to do is sit on your hands. It's not that easy. Find a design distraction. I could have used a design distraction today. Caught a little bit, but we were expecting a down day today because the auction to the upside. I'm not talking S&Ps now. Because the auction to the upside was not providing good auction information, and just didn't think that it was going to be that big a day today. And boy, were we wrong in that. But hopefully you still had a good day. Glitter, trending days have always been a problem for me. I've never been very good at them. I wasn't patient today, got spanked. DA, sorry about that. Live to trade another day, will still be a great week. That's the idea. Why can't I see into the future, Jack? Oh, mercy. Yeah, I know, right? Wouldn't that be nice? Do you remember, what was it? The Twilight Zone. And there was a guy who wanted to place a bet or buy a stock or something, and I think he traded the devil the next day's newspaper so that he could know where something was going to happen in the future. And while he was reading through it, he found his obituary. So I guess we got to be careful what we ask for. I would love to be able to see into the future and tell all of you what I see. But again, we got to be careful what we ask for. Laney, guys, thanks. Had to tighten my entries a lot for Top Step. Pretty calm loser, patient holder in my personal account. Nice job, Laney. Trend days are my slow jam. Nice. Anthony Rojas, Hogue, how do you explain low volume and low open interest in the price moving so much in the ES? Good question. When we're looking at the market coming off the lows the way we have for the last couple of weeks, what we want to monitor for is new business, or is it old business that we're taking care of? Old business in those rallies that we saw over the last week and a half is short covering. We're not bringing in new business and new longs to the upside. All we're really doing is unraveling shorts. And when we unravel shorts without new business, without new buying coming in, we spent the last week and a half taking buying power away from the market. Remember, if you need to cover shorts, you have to buy. And when we have a whole bunch of days that we overall suspect that we're seeing some short covering, unless we see new business come in, that auction is not going to go for very long. As soon as all those shorts are reconciled, now they're even again, and they can come back into the market in any direction. So when we are seeing price moving in that direction on lower volume and lower open interest, it's indicating people getting out of the market. In this case, shorts covering. They're buying, they're covering shorts, they're pushing price higher with their buying, but it's kind of hollow. There's no real push behind it, because to have an auction continue in one direction, we need good volume and increasing volume, or at least maintaining volume, and we need open interest in that direction. If we saw good volume off those lows and increases, daily increases in open interest along the way up, then I would say that's a healthier auction. But we've been seeing since the beginning of the year, pretty much every auction, every contrary auction to the bigger picture, which is to the downside, has been basically telling us this is not the low, if you will. This is not a healthy upside auction. This is an auction adjusting inventory so that the auction down can probably continue. Trying to remember after the low was in 2020 or was it 19 for COVID. Usually it's not going to just turn and all of a sudden you're going to see really good buyers come in right off the bottom. Sometimes you are, but it usually starts with a short covering rally, which we just saw. And we were kind of in an area where we may have been able to push longer time frame traders into continuing to buy, but they didn't show up. We didn't bring new business, and that's what tells me, all right, this hollow rally without new business coming in is in trouble. Alrighty. Institution, Wanda says. Dan, gonna miss you too, Hogue, but you definitely deserve vacation. Go get some good R&R and come back rested and ready. Thank you, Dan. I really appreciate that. Starting to feel like I could really use it. Eric Hoagland, good afternoon. Simply Trading. Just opened my combine today and I exploded in 1 hour. Guess I can't handle the stress. I was consistently profitable paper trading. I just haven't been able to capitalize in this one. Simply Trading. There is a reason for that. When you are in a practice account or some random sim account, there's no accountability, there's no rules, and there's no consequence. It becomes very easy and very free to make some trading decisions that you're going to find much more difficult when you are actually in the trading combine and you have a little bit of skin in the game. God forbid if you're trading a real account, that duress that we feel that makes it harder to make those hard decisions is even deeper. So my suggestion to you is Simply Trading is try not to think of the trading combine as anything well, it's kind of hard. If you've got a system, if you've got a process in the sim account, okay, you're able to adhere to the rules of the trading combine, then you're ready to get into the trading combine. You take that strategy or those strategies and you apply them in the trading combine. You have to think risk first, okay? If you're new to trading, nobody likes to take a loss. Quite often, new traders, when they get into a trade that's moving against them, they'll default to I'll wait. And defaulting to I'll wait just creates bigger losses. We create the outcome that we fear doing that. The other side of that coin, simply trading, is when we have a winning trade on, especially after the pain of a couple of losses. We may have just lost two $500 trades. We finally get a trade that's going our way for $50, and we're thinking, oh man, I better take this. Well, that's not the way the professional traders work. The professional traders trade close to points of invalidation where they know they're going to be wrong quickly and cheaply. And when they get a trade that's going their way, they learn how to maximize the profits on those trades. So think about your average winning trade and your average losing trade. You want your average losing trade to be smaller than your average winning trade. Okay? There's lots of tips that I can give you. Tomorrow, Simply Trading, I don't know if you have been to group coaching. I'm going to pop a link in to the chat here for tomorrow's group coaching. These are great questions for group coaching, and I hope that you're able to attend tomorrow. It's at 1 p.m. Central, and there's a lot of things that we can talk about and we can get into that I think will really help your mental state as well as your financial state as you continue to get into trading. Now, again, simply, I don't know you. I don't know your history in trading. But we all feel that same stress. It's easy in a sim. Paper trading is easy because we don't have that risk. You're actually putting something on the line with these trades in the trading combine, and God forbid if you've funded your own account. Okay? So stay calm. It's not the end of the world. Everything that you have done, I have done, and I'm still here. It's never easy, but just remember, know your risk and accept the risk. When I put on a trade, I pretty much say, okay, I know what the risk is on this, and I'm accepting the risk right now. It's not an affront on you personally. It's not an affront on me personally. It's just an opportunity that didn't play out the way we want it to happen. Losses are part of trading. We have to learn to take them and take them in stride. Okay? Laney, I'm merely adequate on range days. I see a couple of new names here. Welcome, everybody, to the recap. Very happy to see that you're here with me and very happy to be with you. James Swan, folks have some tips for you. Sitting on my hands, waiting and watch. Wait so much that you think you're waiting too much. Patience is certainly a virtue. Simply trading, if you find yourself eager and out there looking for trades, you're probably going to find a lot of them, but most of them aren't going to be any good. When we look for too much, we do too much. There's a lot of paradoxes that come along with trading, and chasing money pushes it away. Think about your process and your strategy. Be honest with yourself with your review on how you're doing, sticking to that strategy and to that process. And if you can put a good process together in the trading combine, you can continue that process through step 2 and into the funded account. And, it would make us very happy to see you become a very successful trader. The road is not easy. That is for sure. Anthony, Simply Trading, just write your observations when you're waiting in your journal. It took me a long time to get disciplined enough to be funded today. Anthony, nice ideas. Congrats, Anthony. Step 2. Hope to say those words soon. Nice job. Anthony says, well worth the wait. Step 2, honestly, the real test of patience. Nice job. Nice job. Hyperhidrosis. Y'all got any more reset codes? Scratch. I don't have to have some of those now. Love the Twilight Zone. Yeah, it was a great show, wasn't it? Frederico, solid response. You're welcome, Anthony. William Hinson, politics seem to be against the market. Yeah, I try not to get too political, but, we all think what we think, and we can tell, I think, what the market's thinking. James, 9:30, got to work tomorrow. Good night, sir. Eric O, my pleasure. I wouldn't be doing anything else. I love what I do. Channing, I like to move my stops to break even plus fees and slippage as soon as the market passes a point that I think it shouldn't come back if I'm right. Then holding it makes a nice, easy, free trade. That's good as long as you let the market get far enough. I've seen a lot of traders, even myself, get in the habit of moving the stop to break even +1 or +2. But the market has this uncanny ability to come back and hit that stop, not hit your original stop, so you get to take that 1 or 2 tick profit and watch the trade play without you. So be careful about that. Oh, no. Okay, hang on a second. Thank you for saying that. All right. There might be a thin session tomorrow, but I'm going to get it done. Group coaching. Here is the actual link. I thought that it had been changed on the site, but apparently it has not been. Thank you for saying that. This should get you into the registration for it. Yes, it is. Okay. That's going to get you into the registration for group coaching. And I apologize. I thought that it had been changed on the website. Federico, my pleasure. Jan R, yep, you got it now. That's the good link. Overanalysis paralysis is a real condition, 100%. All right. Trading and golf have the same principles. The task is simple. Controlling yourself is the real game. There's so many things that we're looking at when we're sitting here looking at a chart, thinking about taking a trade. It's very similar to a golf swing. Your grip, your stance, the ball position, the club you use, the pulling back, the letting go, the coil, the letting go of the coil, the backswing, all of those things all have to happen in sequence for the swing and for the ball to go anywhere. It's very similar to trading. We have to be able to recognize the nuances. We have to have a strategy. We have to have an idea or a hypothesis of what we think the market's going to do. When all of those things line up, we can come up with a successful trade or a successful trading day. It's when we don't have all of those things in line, whether it's swinging a golf club or hitting a bid, when all those things are lined up, we have a much better chance of success. Kind of reminds me of, I don't know if you guys ever saw the movie Body Heat. Was Turner and William Hurt. William Hurt was a lawyer who fell in love with some woman who had a rich husband, and she wanted him to kill her husband, so he agrees. He, being a lawyer, he knows some criminals, and he goes to get a bomb from one of his old clients, which happens to be Mickey Rourke. And Mickey Rourke says to him, why don't you let me do this? You're a lawyer. You don't need to be involved in this. And he says, no, I'll do it myself. And Mickey Rourke says to him, when you're thinking about committing a crime, there's 50 ways that you can mess up. If you can think of 20 of them, you're a genius. And it's kind of the way it is with a golf swing. All those things have to line up in that split second And sometimes it's the way it is in trading too. We have to remember that we're human. We have to stay humble. We have to understand that we're not always going to be right, and we have to take our trades, manage our risk, and hopefully let the profits take care of themselves. I have gone so long here. I apologize. I was going to just talk about in 2007, something really good happened. The bald eagle was removed from the list of threatened species. And in music, hang on a second. Where did it go? In 1997, the Pink Floyd album, The Dark Side of the Moon, had spent 1,056 weeks on the album chart. It had spent that long on the album chart. That, to me, is amazing. It was a great album. Don't get me wrong. Okay. Thank you, Channing. Thank you very much. All right, let's call this a recap. I got to get some things taken care of here and go get my hair cut, so I don't want to be late for that. Get a good night's sleep. Be kind to yourself. Be kind to others. Keep praying for world peace. Blessings to you all, and I'll see you tomorrow morning on the market forecast at 7:45 when we'll check our heroes and see what's going on as the markets turn. See you tomorrow.